Good afternoon, everybody. Phil Simons here with Columbia Grain and your Friday afternoon weekly grain market recap. Well, we did have the August WASDE report from the USDA released on Tuesday earlier this week. So let's go ahead and dive right into it and let's take a look and see what we actually got on the week here. Now, I'm going to share my screen with you again, and we're going to navigate over to our favorite website, columbiagrain.com. And in the upper right-hand corner, we're going to go to the Producer Solutions tab, which will take us over to our Producer Solutions link, which was where we house all of our pertinent data that could be potentially driving the markets. As we noted here earlier, we did have the August USDA supply and demand estimates that were released on Tuesday, the 12th of this week, which did have some pretty good sized curveballs to take a look at here. In terms of what we are actually seeing on the week. Net on net, the biggest surprises really were coming from the potential for new crop corn, along with new crop soybeans, both on potential yields and potential harvested acreage. Did see some pretty big size changes here this week, having a direct result or direct impact on what the futures markets actually traded at early in the week here. But again, when we highlight what we were looking at, we were actually looking at the potential U.S. production for corn and soybeans for the 25-26 crop year. And right now on August, for the August report that came out on Tuesday, the USDA is estimating to us to see a national corn yield of 188.8 bushels to the acre, which would definitely be a record high yield if we were to attain this. And when we compare it to the percentage change from last month, just in 1 month, we are seeing actually a 4% increase in the potential corn yield when last month we were at 181 bushel to the acre. And again, where the average estimate had it coming in at 184.2 bushel to the acre. So definitely a little bit of a shock to the system here earlier in the week. Also, when you look at what the potential production was coming in at 16.7 billion bushels, up about 7% from last month when we look at the potential production for corn, when the actual estimate had it coming in at just under 16 billion bushels. So again, just a pretty significant increase in the potential for corn production to increase significantly here in the 25-26 crop year. Same thing on soybeans. We did see the soybean, the yield actually get increased by about 2% from last month, coming in at 53.6 bushel to the acre. And last month we were at 52.5, and also the average estimate had it coming in at 52.9. So in all reality, that was really where the big curveballs were coming in. This report here, when we look at what the production was for U.S. wheat, there weren't really many major surprises or major changes from where the estimates had it coming in at, or from where we were coming in potentially at last month. So there really weren't many major changes in the overall wheat supply and demand or potential production that we were picking up on here earlier in the week. And really, it was just a focus on corn and soybeans. But with that being said, we did see the wheat market, kind of take it in stride with what the corn market was doing in terms of futures earlier in the week, as it was kind of taking it on the chin. But it did come back a little bit nicely here to wind the week up here. But when we look at the historical yields for corn for this potential crop that's coming at us here, again, the 188.8 bushel to the acre was just something that took a lot of people by surprise here, and what that could actually mean, in terms of overall production for the U.S. Because at 188.8 bushel to the acre would definitely be a record high yield. Last year was the previous record holder at 179.3 bushel to the acre. So it'd be a pretty substantial increase just year over year in terms of what we could potentially see in terms of yield. But again, we are starting to see the export pace definitely pick up as well. But it's going to be needed to take into account all this potential production that we're going to be seeing for corn. And again, when you actually look and see what the export sales pace has been that we saw yesterday, we continue to see, new crop corn getting sold at a pretty decent clip. Was a little bit below the high end of the range in terms of where we thought we would see export sales coming in at for last week for corn, but still coming in at 80.6 million bushels last week was definitely a good week to see it continue there. When we look at soybeans for new crop sales coming in at 41.6 million bushels last week. was kind of at the higher end of the range as well as what the pre-report estimates had it coming in at. But again, we definitely are well aware, and everyone's well aware of the major buyer, China, not coming in and buying U.S. soybeans to date at least. And we are starting to see the pace that we need to have sales at in order to reach the current USDA estimates for soybeans. Definitely starting to fall off the pace that we're needing to get there. So we do need to have something happen relatively quickly if we are to maintain the pace that the USDA thinks that we're going to be at for exports on soybeans. So definitely something to continue to monitor as we go forward there, and it's going to have a direct implication on potential basis levels really throughout the U.S. If we don't see a program really develop relatively quickly here. So again, just something to continue to monitor as we go forward. And when we look at wheat classes as well, actually, wheat had a fairly decent week again last week, coming in at just over 26 million bushels throughout all the different classes of wheat. And you can see the breakdown there. And again, realistically, the hard red winter wheat is definitely getting the biggest benefactor of where we're at in terms of overall futures prices, which are getting a lot of attention from end users and buyers across the sea, that they are taking a look to get extended coverage out there between HRW and soft white wheat coming in at 10.1 million bushels last week again as well. Definitely nice to see that pace continuing to beat what we need to be at in order to meet the current USDA export sales estimates. But again, when we actually see what the week gave us in total, in terms of futures action for price ranges and the overall weekly changes, corn had an overall weekly range of 17 cents for new crop corn, but it actually came back and closed with a net zero change on the week, which was actually very surprising, quite honestly. Especially when you add as many bushels as we did to the balance sheet here earlier in the week. To be down 17 cents at one point during the week and then to rally back and have actually a zero net change on the week was actually a relatively big surprise, quite honestly, in the futures markets there for corn. And we look at new crop soybeans as well. We actually had a weekly range of 65 cents. Again, coming from a lot of political influences as well. We actually did increase by 65 cents what the weekly range was there. We actually were able to hold on to 55 cents of that overall range, so that was definitely nice to see the futures rally a little bit there. We just need to see the cash side of things kind of back us up as well as we move forward. When you turn the page and look at the wheat complex, starting to look at the December contracts there as well. Kansas December had an overall weekly range of 21 cents. We actually wound the week up with a net loss of 9 cents on the week here when the dust settled. And in Chicago, Chicago D's had a 21-cent range there as well, and actually having a net loss of 9 cents. So basically mirroring everything that we saw over in Kansas, over in Chicago. And in Minneapolis, we see a weekly range of 12 cents, and actually we wound the week up with a net loss of 7 cents, or excuse me, 5 cents on the week when everything settled out here. So again, just trying to magnify the importance of having those good till canceled orders out there and working, right, to start hedge to arrive contracts, basis contracts, even our accumulator contracts as well. Definitely be sure to get a hold of your local managers and buyers to look at all the different types of tools that we can offer out in our Columbia Producer Solutions platform. And then on tap for next week, we do have the Pro Farmer Crop Tour that's going to be kicking off on Monday. So they are going to be looking at corn and soybean potential yields as well as they move forward throughout the week. So that's going to definitely be having a little bit of an impact on what we see early in the week in terms of futures prices and movements there. So again, just be sure to have your good till cancel orders out there and have them working early so we can take advantage, right, of any knee-jerk reactions that we see in the markets. Other than that, we're going to go ahead and wrap everything up for the week here. I hope everybody has a great weekend. And remember, if you can drink it, don't trade it. Have a great weekend, everybody. We'll talk with you next week.